what if I told you this 875 grand guest house in the Lake District could still deliver double-digit returns even with the current economic turmoil? In this video, I will break down the deal, the numbers, and show you how the smart investors can turn uncertainty into opportunities. Is UK property in crisis? Let me show you why this 875 grand Lake District guest house could deliver 30% ROI. Everyone's talking about UK property crash, rising taxes, and political instability. But what if I told you this 875 grand guest house in the Lake District could still deliver double-digit returns even with the current economic turmoil? In this video, I will break down the deal, the numbers, and show you how the smart investors can turn uncertainty into opportunities. Let's start with the property itself. This is Ouse Bridge House, located right by the Beachampton Lake near Keswick, one of the most visited areas in the Lake District National Park. It's currently a successful guest house, offering 11 bedrooms, multiple reception, and stunning lake views. The business trading and is a going concern. That means it's fully operational. We can walk in and start earning from the day one. Tourism in the UK might be facing economic headwinds, but the Lake District remains all year round magnet for both domestic and international visitors. The area's occupancy rates have averaged 70% across the 2023 to 2024, and with limited supply of quality guest houses, well-managed properties continue to perform strongly. Now let's talk about the big picture. The UK economy. Inflation remains sticky, about 4 to 5%, and interest rates are high, and the Labour government's anti-landlord policies. But here's the twist: uncertainty creates opportunities. While many investors are sitting on the sidelines, smart capital is shifting towards income-generating, asset-backed investments like guest houses, service accommodations, and apart hotels. Cash in the bank is losing value. The stock market is volatile, and yet tourism is stable. That's why hospitality-backed property can outperform even during a political storm. Let's crunch the numbers. At an asking price of 875 grand, assuming 70% occupancy and average nightly rate of £100 a night, the gross annual income is around 286 grand. Operating costs, including staff, utilities, and maintenance, total roughly about 100 grand a year. So that leaves operating profit of 186 grand. That's a 21% yield on cash if it is fully funded. And this even goes higher, up to 34%, with the correct smart financing and investor structure. I will include this whole presentation with the breakdown on my website. Feel free to download. The link is in the description. Now let me show you how we can increase our ROI with the same deal. Our asking price was £875,000. Now we are going to leverage our cash and going for a 50% mortgage. Our interest rate going to be 6% per annum, and our interest payment will be £26,250 per annum. On a previous calculation, when we bought the property for cash, our net profit was £186,000. But since we have the interest payment, we have to take that payment from the net profit. So that going to be 159,750. So now let's calculate the ROI again. So our new net profit is 159,750, but since we have 50% mortgage, our cash investment is a lot lower, actually half. So now the cash invested is 437,500 times by 100 gives us a 36.5% ROI. So this is how we increase our ROI, by leveraging our cash. Now let me show you how we structure this deal to present to our private investors. It's simple. My position is as a turnkey hospitality investment, not just a buy-to-let property, but as a lifestyle business with a solid returns and real assets. I have similar other large holiday-let properties in the area, so I have the local knowledge, management teams and local power team all ready to deploy. Also, with my due diligence and our thorough selection procedure, you may have seen my 6 C's video I did recently. I can offer a profit share model, for example 60-40 split between me and my investor, or a fixed annual return of 8 to 10% backed by the property equity. Now let's see our exit strategy and long-term values. Over 10 years, assuming a modest appreciation of 5% annually, the property could be worth over 1.5 million, while generating a cumulative profit exceeding 1.5 million as well. So that's total up to 3 million. That's a combination of cash flow and capital growth. 2 pillars every serious investor looks for. So in a time when most people see crisis, we see opportunities. This is one of the many similar deals we are working on at the moment. Ouse Bridge House is a rare mix of location, income and resilience. If you like to learn more about this deal or how to partner on UK property projects, make sure you like, subscribe and reach out via the link in the description. Because smart money doesn't wait for the stability, it moves when others hesitate.